let's go. Monday. We are back again. It's exactly the 2nd of February, ladies and gentlemen. Welcome to another Just Markets live stream. All right, we're back again, baby. Thank you for joining us again. It's exactly 5 o'clock, and it is the first official trading day of February. And boy, does it come bearing gifts. Shout out to everybody in the chat, guys. Can you throw up some W's, throw up some fire flaming emojis, show your presence, mark the register? Let me know in the Q&A. All right, let's mark the register before I begin, guys. While you guys mark the register, I'm just going to do some housekeeping, guys. First and foremost, this is not investment advice. I'm not here to be giving you signals. I'm not here to tell you what to do with your money. However, I am here to point you in the right direction. So consider this. It's for educational purposes only. Lastly, guys, please do not share any of your social media accounts or your private groups. This is not an opportunity to market. It's an opportunity for you to learn something new. And with that being said, ladies and gentlemen, welcome to another fire stream. Ladies and gentlemen, I want to start again by dishing out some receipts. Okay? I feel like every Monday when I come on here, I think that's going to be standard procedure. All right? Because what we do on Mondays, we plan for the week ahead, we project, we check what the structures are doing, we look at what the fundamental outlay looks like, we scan the landscape, and then we try and make a determination on where potentially the market could land based off of the economic data and the technical analysis that we are seeing on the screen. Now, I'm going to start by pulling out some receipts, guys, because last week on Monday, I came out and said the following. And I'm gonna go to my YouTube video from 27th of January. This is last week, Monday, guys. Here we go. You're looking at the DXY right now, and this is from a week ago. Okay, this was the projection, and this was the rationale behind it. I'm gonna let you guys peep this a bit closer, and you can make a determination. Okay, let's go. Together in order to see the dollar that it will take from the downside and move back up again. Like I said, we are seeing a potential triple bottom pattern, and that is a probability. So again, this is another one of those moments where I might just hop back on screen on Monday again, and we might have to look at this retrospectively. Same way we projected the downside move that has gotten us to where we are right now. Let's see what happens on Monday. All right, this is the upside scenario. The downside scenario. All right, so you saw that, right? That was the upside scenario when it comes to the U.S. dollar index. Now, let's check our receipts. Let's pull up a chart and look at where we are 7 days later in the price action, ladies and gentlemen. You know what? At this point, guys, I don't even know what to say anymore. I don't even know what to say anymore because look at that. Look at that. I told you guys that we would have a rotation back up to the upside based off of the price action that we were seeing at these lower levels. I told you guys we got a triple bottom here. And the path of least resistance is to liquidate everybody who's holding buy-side positions here. So imagine if you're a buyer at this lower level here on this double bottom, or you're a buyer at this double bottom over here, where are your stop losses? Where are your stop losses? Your stop losses are located right in this area, right below this level. Everybody's SL is right below that level. So we got that liquidation. We got traders trapped to the downside. For those that thought that the dollar would keep going down, forced them into sell side positions. At the same time, all the buy side liquidity was swept, and now we've got a rotation back up to the upside, just like I had articulated. So once again, guys, I don't know what you're going to make of this, but it's another W for Just Markets. It's another W for Mr. YC. Make of that what you will, guys. I keep saying, guys. I keep saying. And I'm going to say this every single week. My shit is the best in the city. All right? Bring all the market analysts from all the brokers. Bring them all over here. Let's have a quiet chat. I bet my bottom dollar will be the last one left in the room. You feel me? Now, with that being said, ladies and gentlemen, I don't know. Throw up some W's in the chat. Give me some fire flaming emojis if you like what you just saw on screen. And with that being said, I want to get into this week's narrative so we can plot a course for where we are going for the next several days. Okay, because a lot has happened over the weekend. Okay, a lot has happened over the weekend. Now, guys, we can clearly see that the market didn't panic, it got exposed. And that's my takeaway. All right, let's get one thing straight. The last few days wasn't about fear hitting the market. And by the last few days, I mean Thursday, Friday, and today. All right. We are seeing leverage getting checked. We are seeing profit taking at the elevated levels, particularly when it comes to the precious metals. Okay. Now, speaking of precious metals, let's have a look at gold. Let's have a look at gold and try and peep this one a bit closer. Let's have a look at gold. All right. So this is gold on the daily chart, and we can clearly see where we are at. All right. We're still in an uptrend in as far as the overall price action is concerned. However, I would like to bring your attention to this rising, expanding channel. Okay. We've got a touch to the upside there. We've got another touch. Let me just move this chart slightly so you can see what I'm talking about. All right. From the point at which I extended it, right over there, we can see the upper channel has got one, two, and this was the third hit. All right. So on a price action level, we could have seen that gold was overbought. And therefore, we would have expected a lot of profit taking to be happening at these elevated levels. I mean, it's the path of least resistance. Sometimes guys always say trading is not complicated. Human beings are complicated. Sometimes you don't need to apply crazy technical analysis, crazy fundamental analysis. Sometimes it's just about normal human psychology. Once people have made enough money, they will inevitably be profit taking, particularly on the run up to such an overextension. Look at the speed at which we moved towards 5,600. Okay. It was inevitable that we were going to get a massive pullback. And I told you guys last week that should gold drop, it is going to take a dump. Okay. And that's what we're seeing. We're about 4% down on gold today. Silver as well, we're about 4% down as well. So when it comes to gold, guys, here's my narrative on that. All right. It's not broken, it's just liquidated. All right. Gold didn't fall because of it, because the long term story has changed or collapsed. Gold is still on the front foot. All right. In my belief, I feel that gold fell because margin calls don't care about narratives. Profit taking doesn't care about narrative. All right. This is funds raising cash, traders lighting positions. All right. Because when pressure builds, ladies and gentlemen, you sell your winners first. And gold was a winner. So you need to understand the context. This wasn't a vote against safety. This is gold being used as liquidity to rotate into other financial assets. Okay. This is quick cash being made to be moved towards something else. All right. This is liquidity being built. And we can see the cash being moved from gold and rotating back into the US dollar, which is why you are seeing a fall when it comes to gold and a rise when it comes to the US dollar index. All right. I did say, guys, that when it comes to the US dollar index, we've been seeing like we hit a low that is pretty significant. Okay. These levels that we're looking at right over here are pretty significant, guys. The last time we were at these lower levels, just for perspective, because this is a discount. The last time the US dollar was this cheap was in, let me just pull out the date here. We're looking around just hang tight for me, 2022. All right. 2022 around March. So the last time the US dollar was as cheap as it was around the 96 handle, we're looking at, I beg your pardon, February 2022. So inevitably, there was going to be a lot of demand at these discounted levels when it comes to buying the US dollar. Now, the question we need to ask now, will it hold? What do you guys think in the chat? Do you guys think the dollar will hold henceforth? Let me check the chat. Chat, what do you think? Chat, what do you think? Let me know, chat. What do you guys think? It will hold. Ntando says it's going to hold. That's what I think too. I think the US dollar could hold, particularly in light of the path of interest rates. Guys, the president, well, not the president rather, but the tone was set at FOMC. Jerome Powell said higher for longer. It is going to be data dependent. So until the data shows signs of cracking, ladies and gentlemen, I think the US dollar could potentially be back in the conversation. Now, let's proceed. When it comes to the dollar, guys, cash still runs the block. All right. While metals are getting hit, we're seeing silver down 4%. We're seeing gold down 4%. The US dollar walked back into the spotlight. All right. In a real risk off environment, guys, cash will always beat conviction. Okay. And the dollar is still the deepest, cleanest pool of liquidity on the planet. Okay. And in a Fed that's certainly not rushing to cut rates. Jerome Powell said that last week at the FOMC. We're seeing less dovish urgency, more patience, and that's all the dollar needed to firm back up. This isn't about the dollar being strong forever. It's about the dollar being necessary right now in light of the data that we have in front of us. Okay. And particularly when it comes to the Fed, you're seeing that it is boxed in. Okay, let's check the Fed watch tool real quick and check out what our rate expectations look like for the next FOMC meeting. I bet my bottom dollar they're probably below 50%. All right. The next Fed meeting, guys, in 44 days, 3 hours, 46 minutes as I speak to you right now. And as it stands, we are sitting the probability of getting an interest rate cut at the next Fed meeting, boys and girls, sits at a whopping 12%. All right. We could round it off to 13% if we really wanted to. So no cuts signaled for any time soon. And we are seeing that reflected in the US dollar index. Higher for longer, ladies and gentlemen. Higher for longer. Okay. And like I said, Jerome Powell said this. The Fed is boxed in. All right. The Fed is stuck. Inflation isn't screaming, but it's not dead. Growth is slowing, but it's not collapsing. And financial conditions are still tight. All right. So today's market moves are doing some of the Fed's work for them. All right. And that buys them time. And time for the Fed is power, which means that expectations are mattering more right now than action. Okay. We're seeing expectations becoming more important than actions right now. And expectations have shifted higher for longer. I don't foresee another interest rate cut anytime soon unless we see a downward revision in inflation. We see inflation coming down from 2.6% closer towards that 2% target that the Fed has for inflation. And as far as the jobs numbers are concerned for Friday, which is the next big catalyst, I believe that's the one that might shift the conversation. If we see the labor market weakening aggressively, then the Fed will have no choice but to give us an interest rate cut at their next Fed meeting. Another thing we have on the back burner, ladies and gentlemen, we are in the midst of another government shutdown. Another government shutdown. All right. We layer in Washington across the whole narrative. All right. The government shutdown, guys, it risks creeping back into the headlines. All right. We're seeing political dysfunction back on the menu. It's a three-course meal, and uncertainty is stacking up at the worst possible time. And we know, guys, markets hate confusion. And the longer this drags out, that might bring gold back into the conversation yet again. All right. And that's going to keep volatility elevated and confidence fragile. And gold thrives in that kind of environment. So, as it stands right now, ladies and gentlemen, all roads lead to Friday. All right. Let's check out the economic calendar and see what we have on the back burner because all roads lead to Friday. That's the next big catalyst that we have. Let's check out what we have on our economic calendar this week, and then we wrap up our stream. All right, we're only looking for high impact news. We're looking for USD. Speaking of which, as well, if you guys are trading other currencies like the euro or the pound, you'll be interested in looking at the BOE is going to be giving us the interest rate decision as well as the ECB. So for those who are trading Euro USD, for those of you that are trading a GBP USD, have a look at the interest rate decision when it comes out this week because that might have an effect. Not might, it definitely will have an effect on Euro USD as well as GBP USD. Now, when it comes to the main event, guys, we can clearly see on economic calendar, Monday, we've got that PMI data. That just came out now at 5 o'clock, and we are seeing, ha, good news for the US dollar. All right. We're seeing PMI data in as far as manufacturing is concerned on the front foot. Anything above 50 insinuates that there is expansion in the industry, in the manufacturing industry. And we know that the manufacturing industry is one of the highest employers of labor. Services and manufacturing PMI, very, very important to judge the overall health of the economy. Tuesday, we've got jobs job openings, and the big one is definitely going to be on Friday. I don't know why it's not appearing here. Why is it not appearing here? Okay, let me check a different source here. Just hang on for me. Let's check investing.com real quick and check the economic calendar on this side. Is NFP this Friday? Should be this Friday, man. Unless if I'm tweaking, and I don't usually tweak. All right, let's check this out. This week, uh, come on, ads. Come on. What are we doing? Come on. All right, guys, I've got this ad blocker on, so let me just remove this real quick, and then we'll get back to what we need to be seeing here. Okay, this is also giving me a challenge. What the hell? Like, let's shift FX Street. FX Street real quick and check the economic calendar. Okay, Monday, Wednesday. Oh, I know what I did wrong on the just markets one. Okay, okay, okay. I was supposed to extend it to Friday. I only had data from Monday right through to Wednesday, I think. So let's just stretch this out and then apply. All right, there we go. So Friday, we've got the NFP data coming out, all right? And the expectation, well, the previous data showing that 50,000 jobs are created. If it comes out as 70,000 jobs created, I feel like that doesn't favor gold. That still kind of puts the US dollar index on the front foot. So, ladies and gentlemen, the things are set up really, really precariously, all right? But don't get distracted, guys. Like I said, the payrolls data is going to give us the next big catalyst. If we get a week's jobs number, rate cut bets come back, gold finds a comeback. All right, it will put a floor underneath gold and dollar momentum will fade. If we get a strong jobs number, the dollar stays in charge, gold stays under pressure, and risk assets will stay on the defensive. What we're also seeing, guys, is that this sell off in precious metals is also having an effect on risk assets. We're seeing stocks also taking a beating. So, my bottom line for today, guys, the market isn't, this isn't a market for hope. I beg your pardon, all right? It's a market for positioning. All right. The news cycle is changing really, really quickly, and liquidity is going to be ruling everything right now. Hesitation is going to be expensive. It's going to cost you your stop loss. All right. So, guys, stay sharp and stay flexible because you cannot be hesitating, and neither can you be too aggressive in this kind of market. All right. So when it comes to gold, let's check out, well, before we do gold, let's check out what we can expect on the US dollar index. Now, here's my projection. And let's see what we have for next week, Monday. Should I come back on here and we check some receipts? So if we get a higher jobs number, a decent jobs number, gold keeps marching on ahead, we might revisit this section, break to the upside, and then start trading above these levels towards the upside. Okay, we could see something like this if we get a higher jobs number. If we get a lower jobs number and we start pricing in interest rate cuts again, this is how I think the cookie could crumble. We could come back to revisit these levels up here. So we could find a move back up to the upside and then boom, rotate back up down to the downside. All right. So we could get a pullback, create a new lower high relative to the previous high, and then create a new lower low below the 96 handle. Now that's my projection for next week. Let's check out gold. Bring in your questions in the meantime, guys, because I'm about to end the stream real quick. Check out gold. What are we expecting for gold? Sorry, guys, I'm a bit sick right now, so pardon the sniffles. All right, but come hell or high water, we're doing the stream. No sniffles formed against us shall prosper. So we've got key levels here that we need to be looking at, ladies and gentlemen. All right, I'm going to show you right now. The levels that I am looking at right now, our previous higher low is this level right here. All right, and that's on the daily time frame. So we're looking at that level. So we could find ourselves rotating from the structure down here. We could hit that structure up there, double bottom, and then rotate back up to the upside. This is the scenario for a weaker jobs number that puts back interest rate cuts back on the table, particularly if the government shutdown extends. You'll see volatility and the risk premium increasing. Should we get a higher jobs number, all right, that prices out interest rate cuts and continues the higher for longer stance, then I think we could revisit the weekly higher low, all right, and that's this level that we're looking at right here. In that situation, we see gold hitting that level, pulling back, and then coming back to merge with that trend line that we have on the daily time frame. Ladies and gentlemen, what do you guys think of those potential scenarios? Let me know in the chat. What do you guys think? Because it's as clear as daylight. It's as clear as daylight. Like I said, we could potentially revisit the weekly resistance. So we could come back to that level. Let me just do this again. We've got this daily resistance over here. So the market could hit that level and then correct, sort of giving us sort of like a bearish correction pattern, and then boom, down to the downside. And then we revisit the $4,000 an ounce level. Ladies and gentlemen, I think that's how the cookie crumbles. Let me know what you guys think in the chat. I think it's another W stream. What do you guys think? W stream? W stream, for sure. Let me check the chat. What do you guys say in the chat? All right. Hope says, hi, I'm new here. I wanted to ask if your YouTube account name, want to subscribe. So guys, my YouTube account handle, let me leave that in the chat. I'm just going to type it here on screen, guys. If you guys want to follow me on YouTube, because I do post these videos on YouTube, Mr_YEC_sir. Check me out on YouTube, guys. There is my handle on screen. Anonymous attendee, so what do you think gold will do? Will it come back? Will it continue selling? Depends on the data, but I did outline the scenarios. Ndando NFP, Carl says W in the chat. Shout out, guys. I think that was a great stream, fire stream. We checked our receipts from last week. Our projections were spot on yet again. All right, I keep saying, guys, this is the only live stream that really matters when it comes to the local broker industry. Nobody can compete. All right, giving you real insights, talking about the hard data, proper technical analysis, proper fundamental analysis. Blink says, I tried sending a DM on IG after the last class, but message unavailable. Bro, send it again, guys. My YouTube handle and my Instagram handle on screen, Mr. YC, sir. If you guys want to engage with me, you know how to do it. Just hit me up in the chat and we'll cook together. All right, Carl says, definitely going to check out your YouTube videos. Fire stream, not gonna lie, comment of the day. Shout out, Kyle. All right. I think we're good, ladies and gentlemen. I will see you guys next week, Monday, and we'll check our receipts yet again. Shout out. Thank you guys for joining me.